Welcome to the Crypto and Blockchain Talk.
Hello.
Hey.
Guten Tag.
Aloha.
Hola. Shalom.
Hello.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour. Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain.
Hello, everyone, and welcome to this week's edition of Crypto and Blockchain Talk. Well, it's still exciting in the world of crypto and blockchain, and I have someone who's just as exciting to talk to us about what is going on in the world, and his name is Tobias Seidl, and he is the co-founder of STOKR. And STOKR is basically a platform that helps startups raise funds via STOs. And we all love our acronyms here. And of course, STOs stand for security token offerings. We'll go into all of that shortly. But in the first instance, let's welcome Tobias. Tobias, hello, and welcome to Crypto and Blockchain Talk.
Hi. Very, very nice to meet you. Thank you for having me on the...
Really?
Very excited.
We're excited too, believe me. There's a lot of stuff going on in the crypto space. Now, I was just looking actually at CoinMarketCap, and Bitcoin is bouncing back along with many other tokens and coins. But I did notice, and this is very, very interesting, your website, which is STOKR.io, so it's STOKR.io, and on your website, there is a link to a letter, or I should say a press release based on a piece that the German broadcaster ARD published. And it's very anti-Bitcoin. And it must have, especially because I am looking at the letter right now, this must have just set you on fire. Where did they put this out? Was it just like a normal piece, or was it an opinion piece? It basically slags off Bitcoin and pretty much crypto. So tell us, first of all, where this appeared and how much of you went on fire.
Yeah, so it's basically actually a report on the public German television, which our article is referring to and responding to. And I knew that there will be like a report on a German television because I'm also very much involved in the Bitcoin and blockchain space in Germany and several groups. And everybody was excited that the German public television, which is known actually for quality journalism, will have a specific report about Bitcoin. And on the day when it was like broadcasted in the German television, it started like with like the reason for this whole climate change is actually Bitcoin. And it was a very dramatic and drastic report. Did not reflect any of the commentaries and things what people have said. And it was just like a very one-sided report about how bad Bitcoin is for the environment. And so it was like quite a shocking report, which is very one-sided. And then in the end of the report, I think that was like they put like faces, like pixeled faces of proclaimed chef developers, like chief developers, which we all know do not really exist in the Bitcoin world, right? And that all these people were not available for comments because they just want to increase like participation in the rising Bitcoin market. So like these bad criminals actually are behind like the climate change, which is only it's only due because of Bitcoin. So that was like in a nutshell, that was like what's happened on German public television, seen by a lot of people. And putting a narrative out, which we found is a little bit one-sided.
That's absolutely hysterical. I mean, come on, think about it. So I gotta laugh, really. I mean, the more I look at this article, it's, wow. Look, the media... Okay, I don't even know where to start with this one, and I don't really want to bore anyone to pieces, but by God, the media are so freaking irresponsible. They're getting worse and worse, literally by the second. I really am starting to think that no one should listen to any kind of news anymore, but then, of course, that's being very dramatic. Well, all I can say is I don't even know. The sad thing is it's such a garbage piece that I mean, even just the whole way it's constructed and what they were trying to, and even the stuff in here, it's like you could go through each paragraph here and totally show that what they've reported on is far from the truth. You know, they've taken a little bit of truth and they've added a whole bunch of hogwash to it to try to legitimize that little bit of truth. So, I mean, it's just really sad, actually, that instead of just giving a very forthright and saying, hey, look, these are the problems, these are some of the solutions that are coming out, these are the very proactive ways in which the crypto community is coming together to combat many of these, or just this issue, if there even is one, because everyone keeps talking about the energy that is used by Bitcoin. And I already alluded to this on other podcasts. You know, they pick a country every week. Oh, Bitcoin uses more energy than Australia. Bitcoin uses more energy than New Zealand. People forget that fiat money needs trees and processing and printing and delivering. There's so much that has to be done with paper money. And then, of course, with digital money, which is what we're dealing with, proof of work is what people are alluding to. How long ago was this actually released?
It was very, very recent. And I think it was also like, I think it's sometimes very astonishing how the narrative goes in public. And I think one of the funniest things in this show was in the end also because like they interviewed like somebody from China, from the Chinese government, sort of like a researcher. And they quoted him, and because he was saying that China will fail these climate goals because of Bitcoin mining.
Oh my
and I
God.
think when you and I think this was unquestioned. It was like there and people seeing this, can you really believe this? Like China is like such a big economy with all their energy consumption is failing like the climate goals because of Bitcoin mining. And
it's hysterical. It is hysterical.
Yeah.
And if anyone's ever visited China, I mean, but you see, there's a couple things I'm going to comment on there. If anyone's ever been to China, even prior to the crypto revolution, believe me, extremely bad smog and pollution is there. They're doing everything they can, obviously, to clean it up. Even now, China has passed a lot of new laws about crypto mining, but it was there before crypto. It's certainly going to be there after crypto. I remember staying in a hotel that was actually quite high up. I was on a very high floor, and I couldn't even, I'm sure it's changed now because, you know, this is some time ago, and I know the government's been doing a lot of work to clean their air up and to clean actually their environment up. I know they're doing everything they can now. But I remember it being so thick, I couldn't even see the street. And you could actually see the layers. But you see, a lot of major cities have this. A lot of major cities, even as you're driving in, you see these layers of smog and pollution. And you don't think to yourself, oh, well, Bitcoin's at it again. Oh my God. But anyway, it is laughable. And I can't even bother going into more detail than that. But what I will say is that your company did provide this response. I will put the link to this article in the written description of this podcast so that if our listeners choose to read this, you can avail yourselves to that. So I will put the link to that article in the description of this podcast. So let's just talk about STOKR for a minute. So STOKR is just helping startups raise money through STOs. Is that correct?
Yeah, we see it a little bit different. That's indeed how we started in 2017 with the idea to maybe giving like a little bit of background where we come from. It might be interesting. So in 2017, we were meeting. Actually, I met my co-founder Ounap. He's actually Indian, but at the time he was working in a law firm in Hamburg, and I met him at a blockchain conference in Munich, and then we were drinking a lot of beer in the beer cellar.
So we already know it was going to be a great conversation, no matter what came out of it.
Exactly. And and we were talking about ICOs, right? And then he said like, yeah, you know what? why do we not try to create securities on blockchain, meaning that there is a possibility for investors to not only buy a sort of like a utility token, which at that time were pre-utility tokens, right? Because there was no utility yet for the ICOs in 2017, and most of them have never achieved one. Why do we not add a financial component similar to stocks and then just tokenize it? And I thought crazy idea, but why would we do that, And it took a while of thinking, and I, as a lawyer, I was working at that time also for a big law firm, discussing this with all my colleagues, and then I thought maybe it's a really, really good idea, because you can have this direct connection between the issuer and the investor without all these intermediaries, but at the same time you have also the possibility to have a direct claim against the issuer of profits or revenues or whatever they want to share. And then we thought, okay, that's a really good idea for startup financing. We were thinking more broadly, and STOKR is basically an alternative investment marketplace. We see it more like a sort of an Amazon of digital assets. So we provide the possibility for investors to invest into any kind of alternative assets, and issuers to use blockchain technology to issue security tokens or simple securities in the end, because that's basically what they are. And in that way, they don't require any middleman and have this direct connection, total control over their investors 24 hours, 7 days a week. And then these tokens at a later point of time, they can be integrated in exchanges, decentralized exchanges, but also used for lending purposes. So basically, we created a platform for a total new way of financing and creating financing around it. And when you look at STOKR right now, we have some projects now out, like a Bitcoin mining project where you can invest into Bitcoin mining. You can invest into a gaming company. There will be other projects coming very, very soon. But basically, it's an alternative investment marketplace. We want to go a little bit away of this narrative of sort of a crowdfunding platform, because classic crowdfunding is limited to most of the time to debt and high intermediate risks, because normally the crowdfunding holds all the assets. But we provide with blockchain, this direct link between the issuer and the investor, and this makes it very, very, very different, and it's more going into an IPO 2.0 way. That's how we see it.
Interesting. So there are other companies who do also kind of what you guys do. They're your competition. So how are you different and better than these other companies that also bring an STO to market?
A lot of companies claim that they do STOs, but it's not an easy playing field, because you have the regulatory side, you have the company law side, you have the technology side, and all of this, and then you have a very immature market in the existing world. So we have some competitors, but none of them is really getting into this idea of being an alternative investment marketplace, right? Some provide white label solutions to existing players like Tokeny, for example. They are also sitting in Luxembourg with us. And then there are a bunch of companies who say that they are doing tokenization, but when you look into what they're really doing, they don't do it really, right? And that's a little bit of a problem. We would like to have a lot more competitors in Europe, and specifically. We miss a little bit a real competition here. But we are seeing this coming, and also Polymath and Securities and some other platforms are a little bit more matured. I think what will happen in the future with security tokens is as soon as there are exchanges, decentralized exchanges, you will find more players who enable tokenizing securities, because then you have a secondary market. So we are a little bit early in the field, and we can be early because our audience is very crypto related, right? So when we would target, for example, just normal retail investors who are not familiar with blockchain technology,
right,
it's a much bigger challenge. And most of the players in the market, they are targeting more professional and institutional clients, and then obviously their entry hurdle also is even higher. But we see that this is now really, really changing also due to COVID. For us, the whole fintech world is developing from just payment also into digital investments. And therefore you have these companies like Robinhood. We would see our competitors more like as a Republic in US, right? They don't do tokenization yet, but they provide like a marketplace. And we are expecting more of these players coming into the tokenization world instead of like only tokenization focused companies.
I mean, there are a number of companies that claim to do what you guys are doing. The problem I have is with the vetting of those companies. I covered some time ago in one of my podcasts with the lawyer Jonathan Dunsmore an STO that was approved by the SEC, which was so bad. It was such a bad project. It literally bordered on a scam, but it got the SEC stamp of approval. And till this day, and I can't say who it is, just because something is an STO, it certainly does not mean, in a lot of cases, that it's still a good project. So how is it that you onboard these companies onto your platform? What kind of due diligence are you doing with them? And how are you assuring, especially investors into those STOs, that these are good projects?
I think like when a market is being created, you will always have scammers and drifters and everything around it, right?
Of course,
That's
of course.
how it was in the stock market in the beginning. You have like this thing in every market. So this is not specific to a specific technology. We are like a primary issuance platform. So we are helping issuers to issue security tokens, which then can be later on traded, for example, in decentralized exchanges or centralized exchanges, which we were working very closely with, because without secondary market, there's no interest of tokenization at all. And but we are focusing on the quality issuance of the primary market. So that's like one differentiation also to other players. And the quality we ensure, we have like a good, very good team in Hamburg actually sitting, and now they are slowly moving to Berlin. We really vet like the founders of the companies and see whether there is like substantial interest. And what is maybe interesting for you, we only take projects actually which have already like a substantial interest of investors. In this sense, we can also make sure that there is somebody around this company or around this project which would like to invest and now explore maybe like a different route of the investment instrument by using blockchain technology. And then at a third point, we also work with industry experts. So we have several industry experts. You can find them on our team page on STOKR.io. And we have like people from the real estate industry. We have people from gaming. There's like people from like Adam Beck from blockchain mining, obviously, in the Bitcoin world. We have people who really understand like these specific industries, a network of experts who are looking also into this project and say whether this is like is a good project, is it worth actually to invest into. But the decision finally lies also with the investors. So what we also don't do, we also don't promote the projects actively. We just provide like the marketplace as such, and we want to be as neutral as possible. So that's why I said like in the beginning, it's more like Amazon. So you always have like the same user experience, and you can be sure that you will receive your package. Whether the product is then working or not lies actually with the person who is or the company who has produced it. But we try to, obviously, for the sake of our platform and also now in the beginning of this immense market we see in the future, we are really trying hard like to only have quality projects out there. But it doesn't mean that every project will be super successful. You have to be also very honest here.
Well, of course. As of the middle of May, the number of cryptocurrencies on the market, the number of tokens has risen to now over 10,000. So there's over 10,000 different cryptocurrencies on the crypto marketplace. Do you think this asset class has become now too crowded?
I think like when you look at the cryptocurrencies which are on, you can see on market cap, right? Only very few have like real future, in my opinion. Right? Mm-hmm. Some call them shitcoins.
Yep.
And I think most of them are actually, to be very honest. And I think it was like a time when everybody did it, and it's like super easy to when you create like an ERC20 token, and then You say it's a sort of a cryptocurrency or a utility token. I call it always like as a pre-utility token because it has no real utility. And then some definitely have like a good value proposition, I think. I will not even exclude Dogecoin in this sense, right?
Yep.
Even if people will hit on me, because I think as a store of value and people believing in it, why not consider this as a possibility to diversify your investment portfolio? And in the world of money printing right now, with like expecting like high inflation in the US, it has already started, and now we see it also in Europe. I think it's a good possibility to also like to diversify your portfolio and invest into some of the leading, I would say, cryptocurrencies, because we can never know who will last forever, right? It can be Bitcoin, and Ethereum, it can be any of the first 50 or something, which is not there yet. So this we don't know. But when you think about security tokens, that's another game, right? It's only actually there is like the use case of blockchain is different in this sense, right? Because blockchain allows here like the issuer to know who are their investors 24/7. Without relying on a transfer agent, a custodian, a bank. And the investor on the other side does not need a bank account, right? It has like this direct connection with the issuer. It increases immensely the risks of investments. And I think like this is, some people did not consider this so far as an argument why you should invest actually in security tokens. Because when you believe in the project behind, then your only counterparty risk is actually the project itself. Mm-hmm. When I invest now in Apple shares, right, and my bank goes bankrupt, I'm not sure whether I get my Apple shares because I don't own them. Mm-hmm. I don't own them. This is just a depository receipt, something which you have, and then they can lend it out. And protection in Germany, for example, is limited to 20,000 euros. People don't know. People always think that when they have a stock, they own it. It's not true. And you saw it also with Robinhood, like this big scandal on GameStop. You know, you could not even buy any GameStop shares for a few days and cover your positions because like the clearing system in the back was not able to keep up with which is the speed what now like the new generation of investors are expecting. And this will dramatically change with security tokens. And security tokens can then be also traded on a decentralized exchange, which means you don't need a broker. So you don't have a margin anymore. And that's what Peter Thiel is interesting now investing. He was announcing this 2 weeks ago or 1 week ago. He put I think with other investors, 10 billion into a decentralized exchange. And and I think classic stock exchanges like NASDAQ or Euronext and whatever you want to call them, they will have a very big problem in the future. Because there will be a total different digital market. And I think that's what, relating to your question, these cryptocurrencies were a first step, right, showing how easy it is to connect with investors directly. Mm-hmm. But they are not real investors, right, because there was no other utility than 10x to the moon, and you have to believe in it. But when these tokens have like a real claim against a company, which are sharing revenues or profits of a company or a project, then it's a totally different story. Right? Then it's like a new generation of stock markets.
Yeah, absolutely. It is definitely a new generation of stock market. Of course, many of these quote-unquote stocks, which I'm really referring to as cryptocurrencies, a lot of these crypto projects are going to die on the vine. It's a definite survival of the fittest, and I think many of these are not going to be alive. They're going to need serious CPR, and even after that, they won't be alive for much longer. You know, because the whole ICO marketplace, of course, after that whole frenzy that hit in, I would say, 16 and 17 and some of 18, and as people, of course, became more familiar with it. Of course, there was also like we already alluded to, there was a lot of scams, but there were also some really amazing projects. You had some people who, for instance, I always talk about Jamie Dimon, who in 2017 said cryptocurrencies were a fraud, but yet he still went on to develop his own blockchain and everything else for his own high net worth clients, which is in use today, and he's looking to roll out to pretty much the masses. There's been this total turnaround in terms of the way that people perceive ICOs, the way that these coins are coming onto or tokens are coming into the marketplace. It's actually very, very interesting, but I think now might be a good time where I'm just going to very quickly talk about the ICO versus the STO, because we like to do a bit of education on our podcast. So, of course, ICOs, or initial coin offerings, as I alluded to, they were once extremely, extremely popular. We're reading about them left, right, and center. And there was also a lot of celebrities and people like this endorsing them. And just like today, you have celebrity endorsement. We'll talk about that in a minute. But ICOs, or initial coin offerings, are supposed to be similar to IPOs, which are initial public offerings, which are used to raise funds in order to get like a share, quote unquote, air quotes, in a company. So ICOs are basically the crypto version of online crowdfunding, and it's kind of a mix of an IPO and crowdfunding, I would say. Okay, so ICOs offer investor tokens in return for investment or participation in the project. These investments, of course, are in the form of cryptocurrency, which would be given to the person participating in that fundraising in exchange for their hardcore cash. So basically what you would do is you would invest your money, you would get back some cryptocurrency, or you would actually invest into the cryptocurrency and then put that crypto into the project. So for instance, you would buy your, let's say, Ethereum, and then use your Ethereum to trade against whatever token for that project. So of course, ICOs are different from IPOs because anyone in the world can invest in that project. And an IPO, there's also many times certain thresholds which are very, very high in order for you to participate. With many ICOs, you could literally do it for pennies on the pound, and it's more based on the pile 'em high and sell 'em cheap kind of ethos, where you're trying to basically get as many people as possible involved in the project, and this way build a community. Communities are very important, as we know, in crypto. So the token which you got from your ICO was basically your investment in the project, in the company. There are many, many famous ICOs. Of course, one of them is Ethereum. We have Telegram, who right now is being sued in a class action suit, but that's a different topic, which we'll cover in another podcast. So those are ICOs. And then you have STOs. So you have security token offerings. And these are, of course, similar to ICOs. It's kind of a little offshoot. And both are fundraising methods for startups, but STOs are regulated by governments, and they have to 100% adhere to the rules set by that government. And STOs are normally backed with assets, and this means that they have some kind of monetary value in the real world. And it's supposed to create a safer environment for investors and increase trust in that project. Because the ICO market is very unregulated and subject, as we already alluded to scams, there's a lot more risk, but there could also be a lot more reward. There's no guarantee even with an STO. But as I already alluded to, there are STOs which are being stamped, and I have no idea how they're being stamped. In the first instance, Tobias, with security token offerings, what is behind them that makes them a better choice to invest in as opposed to an ICO? And I mean, apart from the fact that they're regulated, what more is behind an STO than an ICO?
What you expect when you invest in an ICO, and what you get is actually, you get like a promise that at one point of time, the token you're getting, like the coin, has like a sort of utility either on a platform or in a network. And then there's like a sort of like a limited supply. And the more people are using actually these tokens, it's called the network effect, then the price is expected to go up. That's how ICOs are working in general. What the ICOs did not have is a financial component. There were some tries to create like a financial component in there, but it never really worked out. And I think this is like the main differentiation to a security token is actually the real financial component, that a security token is representing actually a claim against a company that they share as the same as like a stock as part of their profits or part of the revenues. And this is a main difference which normal ICO tokens did not have, and that was also like the driver for creating STOKR, right? To have a financial instrument, but using blockchain to get like this direct connection between the issuer and the investor. So that's for me like the main differentiation. It's a real financial instrument, while the ICO token lives from network effects. And I mentioned it a little bit before. I considered like all these ICOs as pre-utility token sales. They were called like utility token sales, but they were pre-utility token sales. And we did also some. For example, we advised on, before we set up STOKR, we advised, for example, NXT for their IDO token. And that was also a pre-utility token sale on ERC20. And then they actually provided like real utility tokens as promised later on to use in the IDO network. Ethereum, obviously, you can use. It's very nice, and in other blockchain projects, you can use these tokens to actually make use of the network, and that's very beautiful. But as you mentioned, like most of these 10,000s, probably 99%, they don't have any use case. And this is where the network effects also don't work. What you can see now with other utility tokens, for example, Celsius and the like, they can be used as a store of value of interest rates. And this is like a new market we are also tapping in, as a lending market, which we are also exploring with the security tokens, because this is like a really interesting market in the decentralized finance space, that you lend out your cryptocurrencies or maybe your security tokens at one point of time, and you get interest back. And then this interest may be paid into other cryptocurrencies. There's a lot of things has developed, I think, since like the ICOs in 2016 and 17, and the market gets much more mature. We would not consider like ICO as an alternative to an STO. We think like STO is just like an evolution of the ICO, and not really consider something which is existing next to it. I think there will be really no ICOs maybe in the future anymore. There will be only STOs, and maybe something different coming out of this. Maybe a combination of, that's the beauty about programmable shares. You can think about it. But you can also add a utility to an STO token, right? Why not? That's what we also do for Infinite Fleet, a gaming project. So maybe you can use it as an in-game currency in addition to being like a security. It's just a new top layer, which really has much more value, because you have a direct legal claim against the company that they share what they promised to share. In this sense, it's more like a stock of participation in the growth and prosperity, hopefully, of the projects you're investing in. And the ICO is more limited to the network effects.
But as you know, the SEC is going to put their fist down, and I think, and I don't know this for sure, but it is my guess that they are going to classify every single crypto project as a security. I'm willing to do a bet with you right now.
I totally agree with this, but SEC is like the American regulator. We have also European regulation, which is different, right?
Because there's not only US, there are also other countries in the world, and everybody's always talking about the US so much, and it's a very interesting difference between US and European regulation, and the main keyword here is subjectivity. So the US regulator, they consider what is a security more like from a perspective, what you expect as an investor or buyer of this token, right? And in Europe, it's more like an objective approach where they look, is it like similar to existing financial instruments? And that's a main difference here, because a token can have an expected increase of valuation, and in the US it would be totally sufficient that the buyer thinks that this increase in valuation will happen. So there's, from their subjective point of view, there's a financial component. While in Europe, it would be an objective point of view, would say, okay, does this token promise you a financial return? And that's what I see is a difference when you don't say, okay, I'm sharing revenues or profits of a company, then it's probably not a security in Europe. So therefore, we will have new regulations in Europe now with MiCA, which are targeting utility tokens, the coins, payment tokens, and stable coins, and so on. And there will be a new regulation which says basically, but security tokens are simple securities, and whatever technology you use, whether you use blockchain technology or another, these will simply fall under the current regulation, with hopefully in the future the carve-out that you don't need central securities depositories and the like, so you have really a direct connection between the issuer and the investor. But I agree with you, the SEC definitely, with this subjective logic, it's also logic that they see most of these tokens as a security, because when I expect that the value goes up, it is a security, right? So I would not be a security only when I think this is like a sort of a stable coin, right? Or the value is going down, or it doesn't have any value, whatever. But it leads to very funny things, because when you think about, for example, a voucher, right? In Europe, a voucher token would be definitely a utility token, like a voucher for a concert. And then, as you know, maybe concert tickets, in the black market, they go up. So in US, even like a tokenized ticket could then be considered as a security. While when you would have the ticket in the paper version and not using blockchain technology, it would not be a security. So this leads obviously also to asymmetries of definition of things, and that's definitely a problem in the future. But we will see what they will do. I think the SEC is also very pragmatic, and they have the Gensler. I think he's a very knowledgeable guy, and in the sense, and I don't expect that it will be a crazy regulation, because everybody knows that crypto is coming and it will not go away. But then you have to comply with regulations. I mean, we have laws, and the laws are beautiful. I think that's no reason to always go against regulation. You can also use regulation. You have to live with it. There's no possibility to go around it. And I think the problem of the early stages was that people thought okay, when we issue something on using blockchain technology, no laws will apply, right? But that was an old time thinking, which I personally never agreed on. Laws will always apply to everything, and whatever technology you're using, you cannot get out of this. And whether the laws are useful or not useful, that's a totally different discussion.
I believe that there needs to be some kind of regulations around many of these projects. Of course, it's kind of hard to regulate many of these projects because of the decentralized nature of them. But for the most part, with many of these tokens, more of a centralized element than a decentralized one, especially if we're talking about 10,000 products. We're obviously shifting to a blockchain-dominated future, because if you look at the 100 largest banks in the world, 39 of those, so 39% of the largest banks in the world are working with blockchain and security tokens, okay, STOs. And according to a report by Plutonio, in Europe alone, we're talking about an 85% lift in basically the growth of the tokens market from now until 2024. This could be a conservative figure for all we know. So they see an 85% uplift up until just 2024. I don't know why they stopped it there. But anyway, so you're talking, as everyone has already been speaking about, some pretty exponential growth. That's a pretty nice arc to get if you can get it. Now, just going back to what you were saying, though, about Europe versus America, and I'm just going to make a comment about that because I think it's interesting. It does sound like Europe's a better place to be, especially if you want to have any kind of token offering. It doesn't matter what it is. That's the first comment I'd want to make based on what you stated. And the second thing I just wanted to get your comment was, don't you believe that when something happens in the United States with the SEC, do you see a pattern where it gets adopted by the rest of the world?
That's an interesting question. I think there's one problem with American law. It's like an overarching law, and they apply it to everybody in the world, not only to people who are actually in the US, but also like who are like somehow indirectly linked to the US, right? And in this sense, there's definitely a danger of American law being applicable all over the world. But I think the Europeans, they have also like a very self-confident approach when it comes to regulation. It's also like a different idea. And I don't think that they get so much inspired by American law. It sense also because of cultural and ideological differences they see. And you see it now with like regulation coming out in Europe is very much like differentiating between different use cases. Well, in US, you don't have like a real clear law, just an idea of what it is, and then there's a lot of people who are interpreting it. So I don't think that it will be like that. What will happen definitely in the terrorist financing space and money laundering, that there will be like a common approach to crypto. And there I see also like a little bit more problematic role of the US, because when it comes to crypto, they are really, really, really wary of the people using anonymous coins and even like pseudonymous coins. So in this sense, I think they are overdoing it a little bit in the US, and they underestimate what the criminal world is actually really using is like cash, right? Because cash is untraceable. But they found somehow a scapegoat in the crypto world for this. And this I see a little bit more problematic. And this is taken over also by Europeans, because the whole terrorist financing is very much dominated by American thinking, but not the regulatory world so much.
Interesting. Well, the IEO, I mean, look, we've already done two acronyms. We've done ICO and STO. I feel it's only right to round out this podcast with IEO and IDO. So let's go over very quickly. So the IEO, which is the initial exchange offering, which is when an exchange wants to basically raise funds for specific tokens, and the sale only happens on an exchange. And there's a lot of issues to the IEO model, again, for initial exchange offering. And then, of course, you have one of the other acronyms, IDO, which is the initial decentralized exchange offering. It's basically the same thing as an ICO, except it's a crowdfunding sale for tokens for a decentralized exchange. And it's pretty much just like what I said. It's an ICO, except it's only for a decentralized exchange who is looking to raise money. So, and I think also a lot of these IDOs have vesting periods, which are quite, I don't want to say they're quite, I mean, there's all kinds of different formulas, but these IDOs seem to have and from what I've read, maybe some more stringent vesting periods. So can I just have your opinions on IEOs and IDOs?
I think it goes a little bit into a direction how like capital markets will be in the future, right? And when you think of the difference between the two, actually the one is decentralized and the one is centralized. But you need an asset to be issued. So we see like, for example, from our perspective as an issuance platform, both all of our security tokens could be either used in an IDO as well as in an IEO. So we don't see this like as a differentiation. It's like just like the next step where you're going to trade it and where you first offer it to the public. Do you do it really only on our platform, for example, on STOKR, or you say, okay, I use, for example, STOKR to help me to issue like great financial instruments on blockchain, and then they will be actually offered via IEO or via an IDO, and I can tell you in a little bit that we are working on both also for our projects. So this will also come in the future. It's not an alternative in this sense, right, to what we are doing. It's just like the future of stock markets, how they will look like. And I personally believe that the future is more in the IDO market, because I believe decentralized exchange will have a very, very important role in the future in the capital markets. Yeah. An STO can be like an IDO or an IEO.
Yeah.
So that's how I see it, right? So it's not an alternative So the STO is not for me. It's like not an alternative to an IDO or an IEO. It's just like the place where like tokens can be issued. So whether you issue it directly from the issuer, this is what people do in traditional capital markets. It's like more like a private round or like a public round where you target like some investors. It's more like what you can do right now on crowdfunding platform to be developed as an alternative marketplace, right? And then you have it directly on an exchange and you offer it to your investors there, but somebody has to issue it, however, and it's not really like the exchanges is issuing it, right? They are just hosting the offering. That's how I see it a little bit. So I don't think it's like an alternative. But when you want me to make a real difference, I think for me it's more the primary issuance and the secondary issuance. Mm-hmm. So I think you can combine also both, right? You can do like a primary issuance of an STO, and then you can do like a secondary issuance of an STO called as an IDO. As we are an STO platform, we will actually do both, right, very soon in the future. So we don't think these are real differences to an STO. Think about it like that, right? When you want to trade, you go like more or less like always to a secondary marketplace, right? But when you want to invest, you want to know what you're investing into, and that's like STOKR is a place to be informed about what you're doing. So even if you would participate in an IDO, you would come to STOKR. You would look at what is like this project doing. I know STOKR is a great marketplace offering really quality securities, so I can also participate in the IDO. And an STO requires always whitelisting, and the whitelisting happens on STOKR. So to participate, for example, in an IDO, you would need to have sort of an STOKR account and a verified STOKR account to be able actually to participate in the IDO. So on our marketplace, I think everybody who is coming into this space, making this market bigger, and we will do also IDOs and IEOs of STOKR issued securities.
And 3 letters that people can come up with, correct?
Yeah, and then you want to invent some other abbreviations, feel free to do it.
We'll bring them to you. Listen, Tobias, your platform sounds amazing, and you are obviously extremely knowledgeable in this space. I'd like to thank you so much for coming on to Crypto and Blockchain Talk. You're a star. Your platform's amazing. The platform, again, is STOKR, STOKRIO. So thanks so much for coming on, and I will be looking at what you are doing.
Thank you very much for having me. It's really a pleasure talking to you.
I would like to thank everyone for tuning in to this week's Crypto and Blockchain Talk. Please tell your friends and family to download us on a myriad of podcasting platforms. We have some of the list on our website, cryptoandblockchaintalk.com, but if you just type in Crypto and Blockchain Talk, the podcast, into your search engine, whichever one you use, we should come up for the one that's in your region, because now we're on over 70 different podcasting platforms. In addition, we do stream these on our sister radio station, crypto24radio.com. That's crypto24radio.com, playing 24/7, 365 around the world. And of course, you can contact us through our social media accounts on Twitter, Facebook, and Instagram, but we love to hear from you directly. And the best way to do that is to email us at education@savvydigital. That's education@savvy, SAVII digital.com. Again, thank you for tuning in. We know you have a lovely amount of choices out there in podcasting land, so when you actually tune into us, we appreciate it more than you will ever know. So please be safe, take care, and goodbye for now.